Good morning and welcome to the Financial Markets Morning Commentary from the London Dealing Desk. I'm Andrew Johnston, Chief Dealer at One Financial Markets. So we're just going to go over a bit of what happened yesterday. Zilch, really, nothing in the markets, very, very flat. This is all due to the Fed announcement, which is happening tomorrow at 7 o'clock in the evening. It is an interest rate decision and it is predicted to be flat. However, there is a statement issued of these events, and in the statement we're looking for rhetoric about whether the Fed is going to start to tighten or its bond buyback issuance, or when it will in fact hike rates again. September, October time has been predicted as the next hike, but we all look to the statement for further confirmation about what's happening in the future for the last quarter of 2017. In terms of movers this morning, positive tones on the opening bells for all of the indices. FTSE, DAX, CAC all up. The dollar demand is starting to come back a little bit when we see dollar yen up slightly and cable and euro dollar just off from the settlement yesterday. Looking ahead today, we have some decent economic data at 9 o'clock, which is going to be the IFO, German IFO, which is basically the business expectations for the next 6 months. So a positive IFO today will be helpful towards the euro. We're looking for a survey for the business climate of around 114.9. Anything around 115, 116 level will be positive, and you should see something in the euro based on that. This is a 6-month business expectation, and just it's an indicator basically on what the businesses in Germany feel about the health of the economy. So a positive reading will be good for euro, a negative reading will be bad for the euro. And then this afternoon we have consumer confidence from the US, which is should be an interesting figure. It's actually the only really decent US figure we have today. Once again, it's a leading indicator, plays a major role on economic activity, but it measures pricing and consumer spending basically. So if it's higher, it means consumers are buying more, spending more, and therefore you'd effectively like to think the economy is doing a lot better because people have a lot more money at hand. Generally, things for a market basically positioning from that, if any, will be very short term, just based on the fact that we have the Fed tomorrow. If you notice a lot through a lot of our products, I mean the main ones, euro dollar, cable, dollar yen, you can all see that the activity has basically all flattened out towards the end of this, at the beginning of this week, just because traders do not want positions going into the Fed. They want to see how people are going to react to the statement, and so they either trim their positions or they are completely flat, which means they have no exposure whatsoever. Now, a best play for all of this is always to be very risk aware and risk averse. So unless you know what the statement's going to say, or you know how what Janet Yellen's going to do, the best play is always to be flat and just to trade the sentiment after the statement's being released. So basically, it's going to be very, very quiet today, I believe, apart from the 2 economic data releases that we should have. IFO will be in the next 17 minutes at 9 o'clock GMT. And the consumer conference for US is 3 o'clock GMT this afternoon. Up until then, you will probably see maybe some small market moves based on the data. If the data is flat, it should be very, very range bound as people look to reduce their positions or basically take no very, very short-term trading positions based on the Fed release tomorrow. In terms of that, I'll keep you updated with all the relevant news tomorrow morning. We'll see what the markets do, and we'll go over a few bits and pieces. But as of now, the market is very flat as it awaits the rate decision on Wednesday. But we'll see you again here tomorrow in the front line. That's me for today.